Hello and welcome once again to the Smart Money Dominee Show, and I am your host as usual, Keith Richards. I'm President and Chief Portfolio Manager of Valuation Wealth Management. Today we are going to talk about overbought stocks, and we're going to focus on one stock in particular, Nvidia. And they've been in the news a little bit lately. Biden's foreboding their chips to be sent, their high-end chips to be going into the Chinese market. So that's kind of a big piece of news for them, and probably quite bearish insofar as their markets go. But I want to talk about some signs that I've been looking at on the stock, and just a little bit of history on other stocks that get very overbought and markets become very enthusiastic about them, which usually leads into, at best, a period of soft returns, if not outright downside. So this is as much about this individual stock, Nvidia, as it is about learning to look at the signs of an overbought market. So without further ado, we will share screen and get right into it. Okay, so from the beginning. So as I said, this is another overbought story. There's been plenty of them. If we look at Tesla, the stock ended up being a relatively sideways stock after that monster move between 2020 and 2022. I mean, the stock literally went from around $10 a share equivalent to something like $300 a share. You might have heard me talk about this on past videos and on blogs. Their PE ratio was through the sky. And really the stock in this case had to pause for, well, now 3 years, just to allow the price part to get in line with the earnings part of that ratio. So this is what happens, is you get overbought markets, everybody's excited, and the stock can go sideways. But sometimes it doesn't go sideways. Bitcoin, this was all the rage again right after 2020, with all the fears surrounding what happened during the COVID crisis. Bitcoin went up like crazy. Now, this is the New York Stock Exchange Bitcoin Index. It covers all of the products, but they were all kind of moving the same. And you can see that Bitcoin basically rose from a gain around something like $5,000 in dollar terms to something like $60,000. So that was a pretty big move. Pretty big move down too from that level. We see it eventually came back down to 15 and then is settled recently in and around 30, but that's still quite a bit behind that $60,000+ peak that it hit. So again, we're going to be looking at signs to see when that's happening. And one of these signs you can see right here, just by your good old eyeballs, is that some of these stocks often go quite parabolic before they crash and burn. So keep that in mind. Let's take a look at another poster boy. Now, you guys remember after my best friend and bosom buddy Justin Trudeau got elected, one of his promises was to legalize marijuana, and Canopy Growth was the biggest producer of the product in Canada, and of course they had a lot to gain off of that decision. And you can see that the market kind of went crazy. Everybody thought, well, these guys are going to be making lots of money because everybody's going to buy the product. And well, not everybody does, but truthfully, there have been a lot of, as you probably have seen, Canopy type stores on every corner of every city and town you go. In fact, I see more Canopy outlets than there are beer stores and LCBOs. Very interesting. It's been such a plethora of these things opening. Well, that should mean that they're making tons of money, right? Well, no, because it all comes down to, again, just because people are buying the product, the company's got to be profitable selling it. So the excitement leading into and then after that announcement of the legalization in Canada, you saw literally the stock go from in the pennies to less than $1 to again, 50, 60 bucks a share. And here we are right back to the pennies again. So this is the problem with overbought stocks. And you can see again some parabolic moves here. Look at that move right around the time the announcement was made, and then a second move as it began taking off and the stores were opening. But now, the market has come to the realization that, well, there's many regulations. It's not actually that profitable because of the costs and the investments in producing this stuff. And lo and behold, we're just there's very few blowups that I've seen like this, but it's also in its own way classic of what happens. Here's another one. Do you remember the meme stocks? And there was a whole bunch of them, but the GameStop was one of the poster boys. And you can see, what are the signs of an overbought market? Parabolic moves. Well, if that's not a parabolic move, I don't know what is. This was just a gain coming after the 2020 thing. This is when everybody started acting crazy, you might remember, and people were buying toys and overbidding housing prices, and beginners were trading the stock market. We saw a lot of people that really didn't know what they were doing, and they were following Reddit and doing these meme stocks, and for a while they made a lot of money until they didn't. You can see GameStop, the poster boy, it went from like $1 a share to a gain around $100 a share, and here we are today at 13. So that's quite a ride from 100 down to 13. So just bear in mind that these are the kind of pictures I want you, before we look at any indicators, I want you to keep these images in your mind, because this is what can happen. So I want to talk a little bit about Nvidia, and this is a quote from Larry McDonald. And Larry is a proprietor of Bear Traps. As many of you might know, I use their research, have for a number of years. I use a number of different companies' independent research. One of the things you'll notice that I've talked about in the past is don't listen to sell-side research. That's the brokerage firm research, because they always have something to sell. They have to be bullish. I only use independent research, and of course I do my own technical stuff. I don't subscribe to technical research firms because I do it myself, but I also I do have programs to look for stocks on my own. So Larry, though, has a unique way of doing things, because he's really kind of a capitulation artist. He knows how to spot overbought and oversold situations. And this is something that I have great interest in as a technical analyst who has an interest in sentiment trading. So he's talking here about Nvidia, and that this is what inspired me to write this blog. So I've got a few notes here, and then we're going to look at some price charts and some other stuff. But let's just get it started by talking about the street's price target, which is now average 655. So when we say the street, it's all the sell side analysts. And what are they saying? On average, their consensus view is for $655 in the next 12 months. It's about 420 something right now. I'm recording this video on the 18th. I had to look at my watch there to see what day it is of October. You might be seeing this in 10 days or so, but it won't be $600, I don't think, by a week from now when you actually see this video. So it's in the 400s right now. They're targeting 655. And the sell side analysts have been falling all over themselves, trying to outbid each other for their outlook. They're very much reminding me of the way Tesla was in the early days when it went parabolic before it went nowhere fast. In contrast to the way analysts are speaking right now is the low points on the stock. December of 22, the stock was trading at $160. Now think of that. That's like a year ago, from less than a year ago, from when I'm recording this video. It was $160 and it's now in the 400s. And the sell ratings peaked in December 22. Now, the rhetorical question is, which was a better time to buy? Now in the 400s or then at 160? So, I'm always telling you, don't listen to sell side analysts. I also tell you, don't listen to the media, because they quote sell side analysts and they also quote the government, which tells you what they want you to think. So just be wary of consensus and the media and sell side analysts, because they're usually wrong at the wrong times. So sell ratings, I should say, peaked in December 22. The average 12-month target was $10 higher. Boy, they were pretty wrong. Nvidia's management were not buying the stock, so the insiders didn't like the company. But now they found religion. Lord be praised, Nvidia is going to the moon, they are saying, and they have been buying. The company itself is doing a huge buyback. They announced that second quarter 2023, and they are buying 25 billion of their own stock. The company's buying 25 billion of its own stock, and that's usually a sign of confidence, but I wonder if it's also a question of where were they December of 22 when the stock was much less than half of what it is 10 months later. So that's the points I want to make about the analysts and what they're saying right now, and you can already read where I stand on that, and we're going to get into the charts in a minute. But I also want to just rehash what I mentioned at the beginning of the video, which is Biden is clamping down on export of their key products. So let's take a look at this street target price, which is this white line, versus the actual stock price, which is the yellow line. And you can see that, you know, the target prices fell quite a bit. This was target, what they were looking at 12 months from then. So you can see that they bottomed both the price and the targets last December. There's December of 22. And where are they now? Well, look at the gap between where the price is, and we'll look at the price chart in a minute, but it's been kind of consolidating, going sideways. So here's where they think it's going to go. We just looked at this, mid 600s, and here's where it is. The gap between the sell side analyst targets has never been wider on this stock, and it rarely gets wider on stocks of any type. So this is like an incredible, like I said, they're tripping over each other, trying to outbid each other on who's got the highest target. It's ridiculous. So I want to look at the valuations here just quickly. We always talk about price to earnings ratio, but let's look at price to sales ratio. I've printed a chart like this before. This is the updated version. It did hit 45 times price to sales. Now it's trading around 33, just for comparables, because yes, it's a tech, and yes, they're growth companies, and yes, they deserve a higher multiple than, say, a utility company, for example. But look at the other high-tech leaders out there, and you'll see that they're nowhere near as expensive as Nvidia. This is just off the charts in so many ways. So I'm going to now look at the technicals. So I've given you kind of like what the street consensus is saying, and you know how much I trust those guys. I'm showing you a little bit of the fundamentals. Now I'm going to get into the technicals, and I'm going to look at some big picture indicators. And take note, these are some indicators that you can add to your own collection for big long-term views. Like, this doesn't show you what a stock is going to do next week. So don't think this is a short-term way of looking at things, but this is telling us that things are getting overbought. So I'm going to talk about a few things in a minute. I just want you to understand what each one of these indicators is. If you want, and you have a subscription to stockcharts.com, you can actually go to their chart school and you can look up what these things are, or just Google them. So I'm going to simplify them, but let's talk about Force Index. It was created by a fellow that I used to read his work when I first got into the industry. I don't think he's in the business anymore. I'm gapping on his name right now. A Russian fellow, brilliant technical analyst, and he created an indicator called the Force Index. And what he did was he took the direction, so whether a market move on a given day was up or down, and then the percentage move and times it by volume, and he came out with an index showing the force of the move. So it's a very good indicator to, when you look at it on a longer term basis to see what the force of the market is. Because, for example, if you got a pretty good direction and extended volume when the market's going up, and then it has a down day, but it doesn't really have a lot of volume, it really doesn't fall that much, that's a low force move. So you'll see that net you want to see force moving in a particular direction. So the other thing that I like to use, and this is sort of my proprietary, it's not proprietary because I tell everybody about it, but I've been talking about this for years, and I believe I was the one that kind of discovered this, if you want to say, is that the percentage of the 200-day moving average versus the stock price. So if you see the stock price too much above or too much below the 200-day moving average, 40-week moving average, it can be an indicator that things are overbought or oversold. And I talk about this in my technical analysis course, and I'm sure a lot of you have taken that course. We're also going to look at accumulation distribution. So a lot of you guys know what that is, but it's basically just the relationship of the close to the high and low range, and then times volume. So it really just sort of tells us money flow going into the market. And then finally, money flow index, which is basically just taking accumulation distribution and doing an RSI on it. RSI is a momentum indicator. Okay, so how much momentum are we seeing in this money flow? Money flow may be happening, you might be moving into the stock or moving out of the stock, but how much momentum is behind that? Okay, probably won't remember all those things, but you're just going to look at the squiggly lines on the next chart, and you're going to see these indicators at work. So to start with, my own favorite, which is of course the one I've been credited, I guess, in using, is the percentage over the 200-day. And you can see back when remember we talked about price to sales when it was in the 40s. Well, also the price was over the 200-day moving average by about 47%, 46.9%. I called it 46 here. So that's a pretty big move over the 200-day moving average. Just to give you a comparative, typically when I see an individual stock much over 15%, and when I see the market much over 10% on a broad index, I start to get concerned. And the more concerned I get. You can see here in Nvidia when it was, I don't know the percentage there, but I'm going to guess it was probably something like 25% the stock fell. Okay, it did hit this level, and then instead of falling, it fell briefly, but it's been moving in a consolidation pattern. And right now it's about 25-26% above its 200-day / 40-week moving average. So again, it's still pretty overbought. It's not cheap by any means. Now let's take a look at the money flow. Money flow, despite the fact that the chart is going sideways, you can see the money flow is moving down. Also, I might point out that this stock is below its 50-day moving average, and the 50-day had been supporting it before. So that might be a sign of, again, weakening continuing for a while as it stays below the 50. So anyways, money flow has been declining. This stock itself has been flat. That's a bad sign. You want money flow to be flat when the stock's going flat. Also, here's negative divergence on the money flow index. Remember, we talked about that. It's basically the accumulation distribution line, this thing, times RSI, or RSI applied to it, I should say. And look what's been happening. It went into an overbought status, and it's been diverging down against a flat market. Another negative sign. So final thing I want to look at is the force index. Remember, the force index measures the direction and the volume and the extent. So if we look at that force index, like how much muscle is behind the movement, well, what we're seeing is the muscle behind the previous uptrend. It began to again diverge negatively quite some time ago. Like this indicator started moving down, meaning that the market's a little bit less enthusiastic about it. And I'm sure Biden's announcement doesn't help. So I just want to bring all that to a head by telling you that when you see a parabolic looking chart, an easy way of identifying that is my little rule of what percentage over the 200-day moving average are you seeing. If you're eyeballing a parabolic move, you can check your eyes by measuring that move against the 200-day moving average. It's simple. You can do it easy enough, hand calculator, or use the stock charts tool like I did. Doesn't matter. The point is, you don't want much more than 15% on a regular basis. It can move up and down. If it's an aggressive stock like Nvidia, you might forgive 20%, but you're not going to forgive 45% like it hit recently, 46%, I think it was. So we've seen all of these indicators work. We've seen how money flow was declining even when the stock's been going sideways. There's a lot of negative signs. It's overvalued from a fundamental point of view, and the street's just gotten goofy. And remember, don't trust the street. Don't trust the media. They've been loving the stock. So you have to trust yourself. You have to trust your analytics, and don't even trust me. I mean, I do believe that I'm less biased because I'm very pragmatic, because I'm a portfolio manager and I live and die by the sword. But even saying that, I can be wrong. So you have to do your own work. Please do so, because no one is your guru. There's nobody out there that can do the work for you. Nobody can ride the bike for you. I have a little sign in my office somewhere that says that. Actually, it's this black one right there. It says nobody can ride the bike for you. So just keep that in mind. And I hope this gives you a quick lesson, not so much on why you should not buy Nvidia, more on what to look for if a stock's been moving fast. Just be cautious. And we have some quantitative tools now to determine if a stock is getting overbought. Thanks for watching.